Hi, this is Pat with Energy Solution Partners sharing with your energy market view on the 1st of July. Keep in mind there is a risk of loss when trading commodity futures and options. We've been pretty quiet over the last couple months here as the market has been, for the most part, pretty range bound and sideways. Hasn't been a lot to talk about until just a couple weeks ago with what developed through Iraq. And since that time, we had the initial pop in the market, and now we've been drifting lower again. And so there has not been a whole lot noteworthy in this energy market. Just to give you an idea what we've been seeing, and this is a busy chart here, but what this is the monthly trading range on diesel on the futures month from the high trade of the month to the low trade of the month. And this chart would be the cents per gallon of that trading range. And you can see in here, and we all remember these times when we've seen 40 to 50 cents a gallon just in 1 month that the market traded from top to bottom. And this chart I put together goes back to 2010, so it's about 4.5 years worth of history here. The average through this period, trading range from top to bottom, the average has been about 28 cents a gallon, so right in this range. But as we look out here into 2014, what has happened, and we've been well below average, and in fact, in May of this year, the trading range from top to bottom was only 9 cents a gallon, so just very little volatility in this market and not a lot of action. In June then we did bounce back up to 22 cents a gallon in that trading range, but 10 cents of that happened in just 1 day with the Iraq news that hit the market. And I think the overall market has been pretty complacent here and drifting a little bit lower, and then the shock of the Iraq thing did bring the short covering back in and popped it back up, and as I said, we've been kind of drifting since that time. Looking from a fundamental standpoint, again, not a lot to talk about on the left-hand side here. We look at where the gasoline stocks are. We're sitting today right in the middle of that 5-year average, and this is the report as of June 25th, so this may all change when you hear my recording on Wednesday of this week, as we have not seen the new EIA report yet for this week. But again, not a lot to talk about here in the middle of the range. On the diesel side, we are at the bottom of the 5-year range, but we've been sitting at the bottom of this 5-year range for the last year and a half, and the market just has not got real excited about that. The refineries are running 90% capacity all out. As long as they can run at those high levels, we're keeping up just fine with our inventory levels. I guess one word of caution there, if we do see a refinery hiccup or two, then we could run into some issues here. But the market's pretty content with it at this point. So again, not a lot of concerns from a supply and demand fundamentals story. Looking at a daily gasoline chart here, I guess just something that is worth noting, I guess I've mentioned before, the gaps in the chart. So if we look over here, we see a little gap that developed when we rolled from the July contract month to the August contract month. We started lower, left this little gap here. So we typically always try to fill these gaps, and I would look for that to get done. Whether it's short term here or if it goes down over the few more days and then returns. But I would look at that as a target to come back and fill that gap up. I guess one other interesting note here, again from a technical view, from a chart standpoint, on what gas has done here through the summer months. Each time we have sold off the gasoline market, the low has been a higher low. And then also as we've rallied back up, each time we've rallied, the high has been a higher high. So that is an upward trend here. So now as we have come back off again, I think we'll look for that to bottom out in this range again, and then probably go back up and target this gap and then see where we can go from there. But I guess that's the one technical feature that I do see on the gasoline side that I do think is worth noting. Again, from the stochastics point, we're right in the middle of the range. We're not overbought. We're not oversold. But from a seasonality standpoint, typically the gasoline market does like to run higher from the 4th of July into the Labor Day weekend here. And so we're just entering that window, and the seasonality would point higher on the gas side. On the diesel side, we also created a little gap. And this actually did not happen when we rolled from one contract to the other. This happened from Friday night's close to Monday morning's open. So that's unusual to see that gap develop, both of these being the July contract. But again, that's a target we'll look at to come back, fill that gap. Otherwise, not a whole lot to talk about on the diesel side of things with the pattern we've been. The one-day trade that we did move higher is right here on the Iraq news. Interesting to note, since we peaked out and come back, we're back right in that range that we were when the Iraq news broke. So, been pretty quiet for news coming out of Iraq, so I guess we want to caution not to get too complacent, and I would imagine it's just a matter of time before we start to hear some more coming out of that area. I guess with this lack of volatility, there is one trading recommendation that we do look at here. And for many of you that have traded options with us before, we usually like to look at some sort of spread trade on the options and build a range of protection. But the problem is, with this lack of volatility, it has made option pricing very cheap, and as we're trying to trade spreads, the cheap options don't help us at all. So what we're looking at now is just buying straight out options, and again, lack of volatility has made these pretty cheap. So just to give you an indication what the options are worth, and this is based on Tuesday night's close here. The RBOB market closed at 303.66. So we would look something close to that price, a strike price of 304, and the cost of that option is 4.88 cents. Or we can cheapen that up a little bit, go up to the next strike price at 305, and the cost of that is 4.45 cents per gallon. And this option would expire on the 28th of July, so this is going to give you coverage just for the month of July here. Again, with the option program, you pay the premium. That's the most that you can lose on the trade. If the market goes down, you are out your premium. There's no additional loss beyond that. But if the market does rebound and go higher, if you start at a 304 strike price, anything that would settle above 304 a gallon on the expiration date of July 28th, you would collect the difference. Or if you start at 305, anything above 305, you would collect. So, also going over to the diesel side, looking at the same type of scenario. August diesel futures closed on Tuesday night at 297.82. So we look at the strike price starting at 298 would cost 4.28 cents a gallon to enter. Or if you want to cheapen that up a little bit, not spend as much money on premium, you start at 299 on your strike price. Cost of that 3.86 cents. Again, based on the close of trade on July 1st. If you'd like to hear more about these options, feel free to give us a call. Again, you would have to have a hedging account set up with CHS Hedging to place these trades. And we can certainly do that for you. Or if you do not have a hedging account set up, contact us and we can start that process to get that going. The other piece that we're looking at with this, more so on the gasoline side and for your retail sites, most areas have seen some pretty good gasoline margins here over the last couple months. And so we're looking at investing some of that margin, additional margin that you've had, into these options. If the market does go up, you're protected against a higher price. If it goes down, your good margins are likely to continue. And you spend the premium, you out your premium money with no further risk. So with that, thanks for listening. And if you want to talk any more detail on any of the market, feel free to give us a call. Thank you, and everybody have a great and safe 4th.